So, in the financial state, I get the net cash flow from operation. That means simple C and cash investment, and I calculated the free cash flow C minus I, and also I check with the connection of business activity and the financial statement, that equations. So that part also I checked, and but I couldn't get that C minus I uh, value as same as cash flow value.
Right.
Can I share my screen, sir?
Yes, please. Okay. Operating assets. Okay. Operating liabilities. Okay, fine. Down. Yeah. Right. What's the problem?
Wait,
Hello.
hello, sir.
No, I didn't hear you. What's your problem?
So that can you hear me, sir?
Yeah, I hear you.
So here that financial state.
Net operating assets. Yes.
Yeah, this is uh, so here that free cash flow we get 5.3 million
Mm.
and 15 million.
Right.
So that here I got 4.8 and 3.7.
Right. Right. Okay. So that's
I
a good
think
point.
there is some mistake. I can't find
Okay.
it where I.
So just show me the difference. Just you can take the difference here. C minus I. Just go to the next column. Next column.
I think this is correct
No,
because
free
you
cash
got.
flow. Okay, I can show you. Just stop the screen sharing. I'll show you the first what do you call reformulation. Did you? I'm sorry that I didn't send you the reformatted one, right? But anyway, you can cross check with my one
Okay, so
reformatted one. Just stop sharing.
okay.
Uh, 1 minute. Now you can see reformatted financial statements. If you go to the balance sheet, this is the summary, equity and net cash flow. Yeah, I just wanted you to independently work it out. Yes, I also notice some differences arise. So we can discuss all those things later. That could be some of the reasons where numbers which have been rearranged. The importance of this reformulation also highlights from this analysis reconciliation. Normally, any balance sheet tallies, agrees, assets, liabilities, equity. But when we do a reformatting and do the cross-checking, sometimes there may be differences. So that is due to some, how to say, could be manipulation, even number representations the different ways. So where you can actually this can be linked to another analysis that we are going to discuss later on, that is called soft analysis and the hard analysis. And then the soft components can be adjusted, that is the changes in net assets. That also could be a reason. We need to find it out. But for the time being, as far as reformatting is concerned, this is the cash flow summary. Free cash flow. Are these the figures that you obtained?
Yes, I think the same answer.
Same answer.
Yeah.
So now your question is,
okay.
If you refer to the formula and obtain it from operations, that is from income statement, you come out with a different figure, right?
Right, sir.
Okay, that's good. I also just noticed it. Here you can see the difference. Income, that is B40, and sorry, investment. Then this is free cash flow, that is as so this has been taken from B59 minus B60. So this minus this, right? That is the total free cash flow. Then the dividend is this much, and distribution to financial providers. Sorry, so this is the distribution to financial providers, 2.9, and dealing with lenders, the borrowings, so that is 2 point something. Oh, no, it tallies, right? You need to check. So therefore, total comes to this much. So this is the reconciliation, but I also noticed one difference. Okay, here. So this is the summary. Now you have the total cash flow, free cash flow of this much. That should be divided into 2 like this. So this is 2.9, that is B53. That is coming from dividend paid, right? Straight away from the cash flow statement. And this is B minus B55. Yeah. Yes. After adjusting net increase in cash, because that has to be taken into account. Why? This increase or decrease in cash balance has not yet been utilized or connected to the cash flow adjustment to with lenders. So that's the reason. So therefore, you need to adjust it. Once you adjust it, it comes to the total amount of free cash flow that is amounting to this much. As far as the cash flow statement is concerned, it balances. There is no difference. But if you go to the income statement and take the operating income and net operating assets, that is the balance sheet, then change in net operating assets. So did you get the same amount of change in net operating assets or a different figure? What is your figure? So others also can comment. Did everyone get this figure or different one? Hello? Can you work out the change in net operating assets? Hello? I'm not sure whether.
So I'm checking.
Hello?
Still checking, sir, that
Yeah,
cash
better
for
check. So
CMI.
everyone, so take the balance sheet. Unless you do the work or deal with numbers, it's really hard for you to understand this subject. You need to do the calculations and understand it. Then take your balance sheet, reformatted one, and take the difference in net operating assets and confirm me whether this is correct or whether there are any differences. So calculations may go wrong. According to my calculation, it is 916 million something. That is an increase. Take few minutes and do all the calculations. Then go to do this calculation as well. Change in net financial assets as well. Then net finance expense, distribution. Of course, here I notice a big difference. I just wanted you to check whether you are also coming up with that difference or another one, because this has to be further reconciled.
I got the same difference.
You also got the same difference.
Yeah, yes, sir. Same to
Okay,
net
that
operating
means
asset and net financial asset.
okay,
Same.
that has to be reconciled. There could be some items which have been rearranged and reclassified in the year 2020. Otherwise, it should balance. This is the like advantage of reformatted reconciliation. Reformatted reconciliation can't go wrong if there is any change that is highlighted. So it tells us something. It doesn't mean that numbers are wrong. Like numbers, may have been manipulated. We need to check it. So therefore, I request everyone to follow this formula and check it again. I will also look into the matter again and reconcile. So look at this presentation slide before moving on to today's discussion. I will explain it again. Recheck the reformatting and the reconciliation as well. We need to balance it anyhow before moving. Okay. Okay. This is the idea, reconciliation idea. Finally, income statement, balance sheet, and the cash flow statement should tally. These equations show us that the first one is straightforward. We can understand, right? This one is straightforward, we can understand. Right. Then the second one, the connection between operating income and free cash flow. So this is the place where we need to pay attention. The idea is this. Suppose that entity's assets, what an entity has for its operations are assets. Assets are divided into two, financial and operating. What gives you profit at your own control are the operating assets. But again, in order to maintain such a capacity amounting to that much of operating assets, you need not to invest that much as a kind of operating leverage can be taken from outsiders, your suppliers. So therefore, what you need in terms of finance in order to maintain such a capacity is the amount of net operating assets. Net operating assets. If the net operating assets increase over time, it means you are generating more and more profits. You are generating more and more profits. So that's the reason why, even if it's financial assets, that's true. But here we remove impact of the financial assets to somewhere else. So in terms of, if you recall, the definition of assets, right? Definition of income. Remember, those who have learned accounting, even advanced level, undergraduate, or any other course, income and expense are defined in such a manner by connecting or referring them to assets and liabilities. Okay. Then it says income simply means nothing else but an increase in assets. Income means an increase in an asset without getting them from owners. Right? So finally, increase in net assets. So that is the idea. Then if assets go down, income also go down. Therefore, it becomes an expense. Both income and expense is defined in terms of assets. The same rule is here, applied here. Now you assume that you have earned some income, that's operating income. What does it reflect or represent? It represents the increase in net assets. Under normal circumstances, is that clear? We know that there are so many adjustments and exceptions. For the time being, if we assume that owners did not give you money, you have increased the value of assets by 100 million. Of course, that should be reflected in your operating income. In other words, operating income is represented by increase in assets. So on the one hand, you have operating income now. Then we check how much is left in the form of free cash flows. Of course, this operating income represents assets, of which we set aside that part of increase in net assets. So that goes into directly the investing activities. So therefore, operating income minus change in net operating assets gives you the amount of free cash flow. So that is the explanation for the breakdown of the second equation, or the second stage of the first equation. That can be done by looking at the balance sheet and the cash flow. So the third level, now you have the free cash flow. So this free cash flow deals with financing activities and distribution. Then we'll take example, we assume that after deducting some money for investment, you have a free cash flow of 100 million. Of this free cash flow, in this example, Melstako, current year, it amounted 3 point something, right? 3 point something. What you have to do, you may, like when it comes to borrowing or financing sector, either you borrow from outsiders, you settle existing borrowing, or you would invest outside. If your outflow is greater than the inflow, we call net financial asset position. Assume that in a situation where you had 100 million free cash flow, and after that you decide, or you obtain another loan of 10 billion and repaid 5, what happens? So the free cash flow will be increased by 5. Okay, I'll take different numbers just to avoid the confusion. You have a free cash flow of 100. You obtain a loan of 25, repaid maybe existing or the previous loans amounting to 20. Inflow 25, outflow 20, therefore 5 increase. So once you do this, what would happen? The free cash flow would further go up. Your ability of dealing with shareholders and finance expenses will go up. 100 becomes 100, 105. Of this 105, now you have to add net finance income. If there is net finance income, not expense. So assume that you had financial assets. As a result, financial income also may have come. That has to be added on to this value, cash flow, free cash flow. Why? This operating income does not include this one. That's the argument. That's why you got to be very careful, because I may have a doubt whether we and some confusion in the symbols, pluses and minuses, whether we made a mistake. Actually, this could be reconciled if only and on if everyone does the calculation. Otherwise, some mistakes may be uh, ignored. If you do this one, final one, automatically, if there is anything left, of course, that should have been dealt with distribution, either payment as dividends or repurchase of shares. So that is the idea. What I suggest you guys is to very carefully reconcile these three equations before moving to the detail. Now the detail already I explained. Now you can check further. Operating income and the relationship between net finance expense, this is a reconciliation only, can be connected to net income. What's the difference between operating income and net income is nothing but finance expense. So therefore it is true. So you can, in this example, sorry, you have net finance income. As a result, your net income is greater than the operating income. Net income is greater than the operating income. Now, operating income is connected to the balance sheet. Operating income is taken from the income statement. Now it is connected to the balance sheet. How? With the same argument, operating income at a time t, right, minus, so that is change in free cash flow plus the change in net operating asset would determine the net operating asset at the end of that particular year. Did you get it? Again, the operating income, the C minus I lead to free cash flow. So if you remove it, so that is the impact. Sorry. This entire portion is the impact of change in net operating assets. So therefore, change in net operating assets should be added on to net operating assets at the beginning. Net operating assets at the beginning, change in net operating assets will determine the net operating assets at the end. Now we can connect this one to this equation, liability side. Change in this entire part. Sorry, some cursor is not moving. Do you see the cursor or not? Anyway, so I'll just go. Wait a minute. Hello? Hello, guys. Do you see the pointer now? Yes or no?
No, sir.
Now?
Not yet.
Yes or no?
Print can see, sir, but not moving.
Huh?
Cursor not moving, sir.
No, not the cursor. So can you see the what do you call laser light, red light?
No, sir.
You can't see it, right? Maybe that is not taken to the screen. I just because I'm using this laser light, maybe it is not captured. That's the reason. Okay. Because this arrow is white color, it's not properly seen. But the laser light is much better, but can't help since you don't see it. This is an outside because screen means computer captures what is there, not something that comes on the screen. No problem. But if you see the screen, you must be able to see. Anyway, don't think too much, right? The financial part, reconciliation. This is one. Net finance expense, right? That is for the time t. You pay, simply speaking, we'll take the net interest cost. If you pay interest cost, what would happen? So that is built into why do you have to pay interest cost? It is because that is something that adds to your loan, current year's loan. Assume that at the beginning you had a loan of 100,000 for which you paid an interest amount into 10 plus a capital repayment of 20, right? What would be the end liability? You had a loan of 100 million, of which 20 million was paid. 20 million was paid. Therefore, your end liability is 80. But when you make the payment, automatically you have to pay your interest as well. Interest also becomes a part of your liability for the current year. That is why that net interest expense is added on and minus the free cash flow that has been utilized for lending or borrowing with outsiders. So that determines ultimately the final amount of net financial obligation, provided that the dividend is zero or distribution is zero. Because if there were distributions, you can't lend that much money outside, or if there is a distribution in terms of dividends or in terms of repurchases, such an amount of money has to be set aside. So that is why you have to add it back to make sure this work is something like a what we call roll backward working to determine the net financial obligation at the year end. Then finally, the cash flow reconciliation, C minus I should be equivalent to distribution plus financing. So this is reconciled with my calculations and your calculation as well. What is not reconciled is this one. So therefore, we need to verify why and how it has gone wrong. Please attend on this thing. If we have not detected, we will discuss this thing next week. Okay. And other things already I explained you. I wanted you not to worry that much about further detailing. So this is detailing out the things. You need not to worry all those things at this moment. And one thing for calculations, technically and ideally, even textbooks want you to use the averages, but for the simplicity, we will agree, even for the examination, don't worry. We'll, instead of taking average, we can take only year-end values. Year-end value, but if you want, you can take averages. The idea behind taking these averages in accounting is, for example, say return on net operating assets. Return, that is the profit, does not happen overnight or within one day, isn't it? Return occurs throughout the year. Then returns, that is your income or the profit, of course, is influenced by the management efforts and all those things, but to great extent based on the quality of the assets that you have. So what's the level of assets that you had in your entity? It also may have varied. At the beginning, some amount, middle of the year, another amount, end of the year, another amount. In fact, what amount has contributed to that? Still debatable. It's a puzzle. No one can say that. So this is the one that has contributed. So therefore, many scholars suggest that during year, the asset level may have fluctuated. Therefore, better to take the average. If you want to take the average, the best average is to have many data points as you can grasp. If it is an entity operating for 12 months or 1 year, so assets, at least the most ideal average would be 365 values of assets. You add the values of net operating assets for 365 days and divide it by 365, it will give you the best suitable representative average. That is the best. But it's not practical and not meaningful in when we think of business operations. Why? Assets are not something that intend to change every day. Every day. That's changing. Assets are changing. So today's assets are not the same as it was yesterday. Changing, but productive assets, the buildings, land, machines, and other things are not really changing every day. Even disposal of assets or acquisition of new assets will not happen every day. Once in a while, maybe after 3 months, 6 months, likewise, or lots of arguments are there. So scholars argue, therefore, okay, owing to the nature of very best nature of the assets, need not to think of taking a very comprehensive average. Instead, go for a simple average. In accounting textbooks, that is the reason why always whenever we talk about average values, we take year end and year beginning. But remember that that is the weakest form of average. Weakest form of average. Right. With that, we will conclude that part before moving on to the right. If you have any question, you can ask before talking about equity analysis. Do you have any questions? We'll have a 5 minutes break to start the equity analysis. I hope I have sent this presentation this week. I did not send you a presentation because I thought of discussing the equity analysis. Did you get this one? Hello?
Yes, sir.
Hello, did you download this one?
Which one's the equity one?
Huh?
Equity.
Yeah, equity analysis.
Yeah, yeah.
Yes.
Okay. Go through the learning objective slide. We'll have start the discussion Okay, welcome back. We will start the session on equity analysis. Are you with me? Hello. Are
Can
you
you
there? Hello. Am I audible to you?
Yes, sir. Can
Okay.
hear.
Um, Now, equity, when it comes to equity, now everyone knows that it's only a mere label. The difference between asset and liability is the ultimate value of equity. Then you may ask a question, then why are we doing a separate analysis in the equity? Why don't we analyze assets and liabilities separately? Yes, of course, you're right. If you do a detailed analysis on assets and liabilities, we need not to analyze equity separately. However, when we analyze assets and liabilities, we take into account the attributes of assets and liabilities. The changes in attributes of assets and liabilities, of course, have affected on equity, no problem. But within corporate operations and engagement, there are other transactions, events, operations, which directly impact on assets and liabilities, but some of the things are not adjusted even in the books of accounts. So therefore, without doing a separate analysis on the equity component, we will not be able to understand the impact of such things when we do a valuation of a company. So keeping that in the forefront, we continue with the equity analysis of the shareholders' equity. Shareholders' equity is just already, as I just explained you, the difference between assets and liabilities. Of course, that is true. But in the presentation format, that is presented in the balance sheet or the financial statement of financial position as the stated capital. Stated capital, that is number one. If anyone has a doubt, those who have not learned accounting, please ask. Stated capital is not the total amount of equity. Stated capital is the net amount of money taken from shareholders by the company to run its operation. Net amount, received or receivable. That is what we call stated capital. When we run the business, reserves are created. Therefore, reserves are part and parcel of the equity. Lots of things are there. Some items give rise to creation of reserves. For example, revaluation of property, plant, and equipment. The differences are not seen in the income statement, but that is in the other comprehensive income, but not in the profit for the year. That's number one. But even that one, from accounting perspective, we can understand. But apart from that, there are other arrangements that would affect to the value of a corporation due to shareholders' engagement, such as share repurchases, placements of shares, employee share ownership schemes. So those are the things which are hidden in financial statement. When we do a real valuation, not for the ratio calculations or any other things, when we make the final valuation, these aspects are required to be understood very well, and required or corresponding changes must be made to the final value. That is the reason why we go for shareholders equity analysis. I hope that this structure is familiar with you, since how the final balance change during the year is not directly or with details are shown in either income statement or in the balance sheet. Accounting standards require a separate statement to be prepared called statement of changes in equity. Typically, a statement of changes in equity has several columns. Number one is the stated capital, revaluation reserve, forex reserve, other reserves, retained earnings. Likewise, you can add many columns as much as you want according to business realities and requirement of accounting standards. However, apart from other than this stated capital column, all the other columns deal with reserves. Some of these reserves are realized, some are not. So from that perspective, revaluation reserve, forex reserve, some items, in the case of revaluation reserve, entire value has not been realized. In the case of forex, also unrealized. Other reserves are realized. So don't worry that much whether it has been realized or not, but they are reserves. This is the presentation requirement. You need to show the movement. What's the opening balance? How items change due to that or this reason, revaluation or adjustments arising from the accounting standards, and the transfer of profits from the profit or loss statement, new share issuance, repurchases, and dividend payments, the capitalization of reserves. Please note that this word, capitalization of reserves, has to be used with other terms as well. Sometimes when you go through textbooks, you may have come across some items called scrip dividends, and bonus shares. Have you heard about bonus shares and scrip dividends? Hello? Hello? Please respond.
Yes, sir.
Right. So do you know that both are the same, or how do you understand these things? Same thing or different? Bonus shares, scrip dividends, capitalization of reserves, are they the same thing or different things? Yes?
Scrip dividend in the sense they are capitalizing shares to the existing shareholders, sir.
Okay, true. So is that the same thing then? Like that's the question, like a scrip dividend and the capitalization of reserves and bonus shares. How do you understand them?
Uh,
But
In the
what you
bonus
said about that script dividend, yes, correct. Like, so when you issue script shares, so capitalization of reserves also takes place. So how do you explain that to others, like within the class?
in the
Yeah,
bonus
please.
share issues, sir, the
Sorry.
in the bonus share issues, sir, the total
Hmm.
equity is not changed.
Hmm.
But in the script dividends, there is a new share issue, so that's why there is an increase in total equity.
Hmm.
I think.
Okay, it's all right. That's all. Then how about the capitalization of reserves? Will there be any increase in equity?
No, so there is no change in equity when
No change.
capitalizing the
How
reserves.
about the response from others? Actually, it is good. Just see, like if you talk only, I would be able to understand the present situation and only to clarify misunderstanding and misinterpretations or misconceptions. Because one of the biggest things in accounting and finance is not a big deal. Actually, some jargons are there. Lots of jargons are there. Unless we talk and clarify, we will not be able to understand. Okay, good. So there is a point I have to explain to you. I'll come to that point later. How about others? It's feel free, like better, feel free to talk, nothing to lose. How about others? Hmm? Yes. I want you to speak. You can speak in Sinhala, English, no problem. මොනවාට තේරෙන විදියට කියන්නේ පොඩි මොන විදියටද දැනෙන්නේ කියලා. නැත්නම් මේක තේරුම් ගන්න අපි සාකච්ඡා කරන එක. It would be really boring.
Excuse me, sir.
Yeah.
Sometimes is that right issues can be done for the existing owners lesser price than the market
No,
price of
I'm
the
not asking about the right issues. You are talking about the right issues, right?
yeah.
No, I'm not talking about the right issues now. I'm talking about now script dividends, capitalization of reserves, and what's the other one? Bonus shares, not the right.
Yeah. When it's come to that capitalization of reserves, that reserves can be capitalized from that from the using revaluation, general reserve or retained earnings. Then sometimes is there some order of capitalizing? Is there enough funds from the revaluation reserves? First consider that and then move on to the other reserves likewise.
Okay. How about others? Can you see my screen here? Can you see the screen?
Yes, sir.
With this Amana Bank announcement? Which one do you see? It's a presentation or this one? Amana Bank.
Ama,
Actually, you need to inculcate a habit of just being in touch with what's happening, and you should come out with some questions, new issues, and you should ask and provoke the class. So that is the way of learning. Otherwise, just calculation of ratios or talking about financial statements give nothing for us. This is the recent example of script dividend. Okay, before explaining it, like those two explain, just gave some ideas. Others are a bit reluctant to talk. නමුත් ඔයගලන්ට කතා කරන්න පුළුවන් මේක ගැන යම් අදහසක් තියෙනවනේ. account මේ subject එක කරන්න එනකොට at least ඔයගලන් තව subjects කරලා තියෙනවා, finance හරි accounting හරි business related subjects කරලා තියෙනවා, companies ගැන අහලා තියෙනවා. At least මේ වචන තුනවත් අහලා තියෙනවා, the dividend, bonus shares, scrip dividend and capitalization of reserves කියන වචන තුන අහලා තියෙන්න ඕනනේ නේද? You have heard about these three terms. What are the implications of these? Okay, before explaining you the situation, I would like to ask again in simple terms. These three, now when we explain the capitalization of reserves, bonus shares, and scrip dividend, of course, there are three things. So since there are three names, therefore actions also totally different from one another. But my question from accounting perspective, do these three scenarios, three situations would give rise to three different impact when we take the financial statements, or the same impact? Just explain. And so these would be the nature of questions also you would get at the examination, and not something to reproduce. Is the question clear to you? Question is bonus shares, scrip dividends, and capitalization of reserves. Are they, I mean, impact of these things is the same or different? But someone just told me, one of you guys just told me, it's different in the case of scrip dividend and bonus shares. How about the others? What I want is not the right answer, but I want is some kind of response from you.
We heard all three are same. I
Same.
don't know, correct? Yeah.
Why?
I heard that,
Yeah, it's okay. Don't worry. So that's what I just told you. Need not to worry whether it is right or wrong. Just be worried about why. You need to have a reason. Why do you say it should be same?
it is pay from company, from some organization to shareholders.
Sorry, again. Can you speak a bit louder?
That share, bonus share or scrip dividends pay for the shareholders from the company as a dividend or some as a bonus.
Why do you say that is same? Like in the case of your course, company pays for shareholders. In the case of bonus, scrip dividend, either the same thing, different, but in the case of capitalization of reserve, so sometimes you can say yes, same, because this is how I have heard. I feel like this. So that is the reason. So I mean, sometimes we may not have very good understanding or analysis, but you feel like, yeah, it should be the same, but there can't be. Oh, it should be different. So what matters is this justification, the reason. How about others? I would like others to talk. Everyone, please give your comments about this. So this is the very basic starting point of the understanding. Yes?
In my understanding, I think both final impact will be same in the equity statement, but in the reserves and the stated capitals, within the equity statements, there may be change, but the total overall impact from the equity remain same thing from these three concepts, sir.
scenarios. So will it increase or not? No.
No change, sir.
Will not, right?
Yes, in the total impact will be remain same.
Okay.
But when with the capitalization of the reserves and bonus share and the scrip dividend, the impact within the equity statement will be different.
What kind of differences would you see?
When the capitalization of the reserves, we can take it from the general reserves or something. So when we are giving the bonus shares, we can get it from the return earnings. So the increase in the stated capital side, at the same time the reserve.
Okay. We lost the voice. Don't know whether. I'm afraid whether my connection lost. Do you hear me?
Yes, sir. My connection went down.
Okay.
So,
Okay. Okay. Good. That's good. How about others? I want everyone to talk. At least, just same or different.
What I felt, sir, capitalization, both bonus shares.
Who is this?
This is Madhavi.
Madhavi. Oh, yes, Madhavi. Yes. What do you say?
Now I feel, sir, bonus share issue and scrip dividends are two modes of capitalization of reserves. So when it comes to bonus shares, there would be no change in equity. The equity changes, but there would be no change in net assets because no cash receive or outflow. So I feel like no change in equity, but there's no change in net assets, but there's a change in equity.
Okay. So before forgetting, because I may forget this thing. So in your explanation, there is a contradiction first. You may say that there would be a change in equity, that is either increase or decrease. Then there will not be change in assets, net assets. So technically it cannot happen. Why? When there is an increase or decrease in equity, of course, that should be reflected in net assets. So that is number one. Okay, I'll come to that point anyway. So that is how you understood as of now. You feel like in these cases there is a change in equity, but finally there is no change in the asset, something like. Anyway,
yes.
Yeah. How about the others? Yeah. It's good if everyone talks. Ilakshi, what's your opinion?
Yes,
Huh? It's all right. Don't worry. Because if you talk only, we can clarify these things. What do you think? Right. Hello. Okay. Listen very carefully. Listen very carefully. This has to be clarified first. Simple and straightforward answer about these three items I referred: bonus shares, scrip dividend, and capitalization of reserves. The impact to the equity is the same, no matter how it is arranged and done. That is number one. Number two, there is no change in equity. In fact, these three terms, though they were used as three strategies or actions, it is the same action. I will explain one by one. In the past, even now in some jurisdictions, the term bonus share is used. But in Sri Lanka and many jurisdictions, now that term is not used. It belongs to the past. But still UK, I think bonus share concept is still there, some jurisdictions. So that could be the reasons why we see these things in textbooks. As someone just mentioned, in the case of bonus shares, you give extra shares or additional shares to existing shareholders without charging. Therefore, total number of shares go up. Total number goes up without having a corresponding cash inflow. Then equity will not change. How do you make this adjustment? Then simply transfer some money. You can't do this thing unless you have reserves. Then you can use reserves. There are some order of reserves. So as of now, the one technical problem is whenever we transfer from reserves to stated capital, you need to make sure that those reserves have been realized. So therefore, it is not possible to use reserves such as revaluation reserves, forex reserves, or any other specific reserves that you maintain. Other than that, any other revenue reserve can be used. General reserves, profit and loss, all those things are general or revenue reserves. So take money as you wish, and as long as that's available, transfer from reserves to stated capital. So that is simply that is the accounting process, mere book entry. Now we don't use this term. Instead, it was replaced. Even by that time, there was another concept. When you invest in a business, you have a mentality of getting return. If you do any kind of investment, if you just deposit money in the bank, you expect interest. If you buy jewelry, property, or even spend money for education, you expect something in return more than what you sacrifice. So that is the meaning of investment, right? Because investment has a very broad meaning, very broad meaning. Investment is something that you sacrifice expecting a return, right? It could be financial or any other thing. So money spent for education is an investment. Since there is no public discourses among the society or even among intellectuals, what I have seen, even this particular word investment is misused. Recently, 40% of Yugadana, that LNG plant was sold to an American company. Many ministers and whoever who support came and argued that that is an investment. It's not sale or any other thing. Is that true? It is partially true. One, whoever who bought is an investment. Did you get it? So they never, I don't know whether they are just knowingly tell these things just to mislead the general public, or without knowing the real meaning of investment, they are telling. So this is an investment. Of course, when there is a particular transaction, so transfer of resources, there is an investment. But you need to ask the second question, whose investment? So that is an investment of the company who bought the plant. Why? They bought the plant, 40% of these things, expecting some future benefits. Therefore, that is an investment of that particular company, no argument. What is the investment for the country? You have not invested anything. You have simply sold and taken that 400 million and use it for paying debts. So there is no investment for you. Whereas, assume that this company comes with 400 million and you also contribute another 200 million and put up a separate plant expecting future benefits from that new investment, then that is an investment where investment is contributed by. So I am just explaining something else because automatically that word pop up in my mind. So that is just to clarify. So likewise, when it comes to this investment mentality is that you need to have a return. Shareholders want a return. How can you get a return? Unless they give you dividends. Actually, in the case of quoted shares, publicly quoted shares, you need not to worry about dividends as long as proper governance is there. Managers are highly accountable, ethical conducts are there, capital markets are efficient. Don't worry. Why? As long as the company keeps on earning profits, value should go up. When the value goes up, so that reversal also of that also can happen. If the company doesn't create any value would be distracted. So depending on how the value is accumulated, the price changes. When the price changes, you can sell them shares in the stock market and realize the profit. That's it. But if dividends are paid, value destruction would be there. However, we know that in the world, especially in this neoliberal world, systems do not work to protect the interest of all the stakeholders. Instead, they favor selected stakeholders, mainly key shareholders, managers, or whoever who have lots of connection with you. As a result, lots of wealth amassed in businesses can be misused, like in the case of governments as well. Then they use a strategy of giving some money as dividend. That is the reason or the logic behind giving dividends. For sometimes you do not have any new opportunities of reinvesting the extra money earned by the business. Then better to give them as dividends rather than keeping in the form of cash. That is useless. That's that. But as I just told you, when a company gives dividend, there would be cash outflow, thus reducing the value of the company. Alternatively, companies came out with another strategy. Hey guys, you want dividend, right? So we'll give you, but not in terms of cash, but in terms of the shares. Your number of shares would be increased. So as of now, you hold 10 shares. From tomorrow, you will hold 11 shares. Technically speaking, in terms of value, nothing will happen. Number of shares goes up. Accordingly, the value of a share should come down. In fact, there is no use of giving scrip dividends from that technical and mathematical explanation point of view. Earlier, say 10 shares were there in the company. Total value was, say, 110 million. 110 million divided by 10, it's a value of a share is just 11. Now 10% is given as a scrip dividend. For the time being, assume that fraction of shares are also applicable. Now you have 1.1, but the value comes down to 11 divided by, now you have 11 million. Therefore, value per share, theoretical value per share comes down to 1. Since you have 1.1, practically it is not possible, just for the explanation the purposes only, fractions cannot be held. Then 1.1 into 1 means again the same. 10 means 11. So your value in shares has not changed. Then you should ask the question, so what's the reason for corporations to issue scrip dividend? Actually, in terms of value, there is no reason. But there's a practical reason. Practical reason is once you declare dividends, even though, so declare scrip dividends, even though there is no cash outflow, number of shares will increase. So number of shares really matters when shares are traded on a stock exchange. it really links to the liquidity of shares. Therefore, liquidity of shares can increase. Earlier it was 10 million, now 11 million. That may give rise to increase the demand and supply, or the trading possibilities, investment possibilities would increase. As a result, there is a likelihood that value per share can go up. You can do a research how best the scrip dividends have contributed for this. So this is the example Amana Bank came out. Amana Bank proposed, but here again, since the money is not taken from the shareholders, even in the case of scrip dividend, money is not taken from the shareholders. Money has to be, or equivalent value has to be transferred from reserves. Because of that reason, a certain value has to be determined. Here, value has been set as 2.9 rupees. What is the proportion is 1 to 29. If you hold 29 shares of Amana Bank, you will be entitled to get one additional share at this particular value, which is transferred from reserves to the stated capital. That's it. No. You can observe this impact later on. Last week, Amana Bank shares were trading at an average price of 3 to 320 rupees per share. Then this was given, but this is not a huge increase, and due to, in the market, lots of manipulations so takes place. The last week, what happens, automatically share price of Amana Bank started soaring and went up to 4 rupees and 460. Now it comes back to 380, something like. Now high volatility is there, partly contributed by this scrip dividend proposal and some other additional reasons as well. Then number 2, now scrip dividend does not increase the equity value. Bonus shares was the old concept, then the same thing, no increase. And similarly, instead of scrip dividend, what we call share splitting also takes place. That's purposefully done. Many corporations did it, companies in the Haley's group. I can't remember. Milstacorp didn't do, but I can't remember whether in the past it had done. The recent past, no. You split the total number of shares into 2, 3, 4, 5, likewise. For example, Royal Ceramics, one share was split into 10. Then you have, so total number of shares in issue increased by 10 times, 10 folds. That's the only impact. You claim you are happy that now you have 10 shares. Earlier you had only one. So therefore, another point is share split also has the same impact. Capitalization of reserve is the common term now. If someone wants to use the term bonus shares, now they recommend better not to use this term. Use either scrip shares or capitalization of reserves. Why? At the end, the actual transaction is nothing but the transfer of money from reserves to the stated capital. So that process is called capitalization of reserves. So therefore, end result of capitalization of reserves, scrip dividend, bonus shares, and share split is the same. It is exactly transfer from one place to the other, book entry. Now you can ask if you have any doubt or confusion. Someone had a little doubt about scrip dividend, thinking that the money will come. Is it clear to you that the money, extra money, will not come to the company as a result of scrip dividend?
Yes, sir.
Okay. Right. Then are there any other items that you have any doubt about the changes in equity? Anyway, in later we will be discussing this right issue for the benefit of you guys. So someone talk about right issues. Right issue of shares is a new issuance of shares. Then again, you may ask, okay, scrip dividend also new? Yes. In the case of scrip dividend, new shares issued to existing shareholders without charging any money. It's bonus. Right issue is issuance of new shares first offered to existing shareholders at normally at a price which is less than its value or the current market price. It is to give a kind of benefit. How a benefit is passed on to them. Okay, so now assume that the company, so the market is very efficient, value of a share is 10 rupees. You have 10 shares.
Excuse me.
Yes.
We can't hear you, sir. Last time.
Now, do you hear me? Hello? Am I audible enough to you now? Hello? So these are the technical problems.